Today we're going to be talking about understanding the ins and outs of your commercial deals. So basically, just a high-level overview. What I'm going to talk about is some basics to commercial mortgages, how to put them together, how to look at them, how to submit them, and then I'm going to talk a bit about GlassLake and how we fit in the space to meet your commercial mortgage needs. So, with commercial financing, typically it's very similar to alternative financing or private financing. Unlike prime lending, Schedule A bank lending, there's always a story that's behind the deal. Commercial mortgages, whether it's alternative or it's A bank lending, the story is important because every deal is unique. Unlike a residential mortgage, you input the deal, you input all the necessary info on your, whether it's Velogix or Velocity, and it just cranks out an approval. There's always more of a story that we've got to tell when it comes to commercial mortgage financing. Now, when it comes to the story, there's two parts to that. There's understanding the story, and that's basically by you gathering all the necessary information that you need to understand what's happening with this file. And then we'll be talking about it later, telling the story. So back when I was a kid, back when I was in school, they always said, the W5H. The W5H was who, what, where, when, why, and how. That basically formed all the questions that you needed when you were, doing either a science project or when you were looking at something, how you analyzed it. And it extends to mortgages. I like to, if you're looking for a way to understand the story, just ask these basic questions: the who, what, where, when, why, and how. So when it comes to the who are your borrowers? Is it an individual, or is it a couple of individuals, or a series of individuals? Is it a numbered company? A lot of commercial mortgages are held in corporations, numbered company, whether it's an Ontario Inc. or Canada Inc. So you want to know who they are and then a bit more about them. So you're going to drill down a bit. What? So what are we doing? We're either going to be doing a purchase or a refinance. They're going to either be acquisitioning a property for their purpose, whether it's investment or to run their business, or they're going to be refinancing an existing property that they have. And you always want to know what's the purpose of the refinance. But again, I just want to cover the basics on the who, the what, which in this case would be purchase and refinance. Where? The location and the market. So where is the property located? Is it in a larger urban center like Toronto or let's say Hamilton, or is it in more of a secondary market like let's say Sudbury or North Bay? Or is it even in a tertiary market, which is outside of that, Sudbury or North Bay? Just a side note, GlassLake goes to all those. So we will look at properties all across Ontario. The when is the closing? So if it's a purchase or a refinance, there's usually a closing date that's assigned. Some of them are very strict, especially in the case of purchases. With refinances, you might have some flexibility depending on what you're using the funds for. If you need the funds to buy another property, so you've got a property that you're refinancing and you need that money to close on another property that you're purchasing, then that closing date is very important. But typically with refinances, you have a bit more flexibility because you're just taking money out to either invest or to do something else with it. But again, if you're buying another property or if you're paying out an existing mortgage, you have a hard closing date that you're going to need. So, the when is the closing? There's also a condition of financing date. So many times, if it's a purchase, you've got to provide the seller, as an answer. You've got to be able to waive that. So condition of financing, we need to know that as well. The why. Now, the why is a bit more of an open-ended thing. What's the purpose of this transaction? Now, you could say, well, I'm going to buy the property. Well, dig a little bit deeper. Ask, why is this investor buying this property? Why is this self-employed owner-operator buying this property? As you get to know more about the deal, or you get to know more about the borrower themselves or the circumstances, Does it sound like it makes sense for them? You want to have an opinion on, why are they doing this? Does it seem something that might not be a good idea? And maybe you can give your opinion. Like we're limited in the advice we can get, but for yourself, as you're going to be presenting it to a lender, you got to know the why. The lender might say, why are they doing this? And you should be prepared to answer that. And, further out, why Glass Lake? A lot of times somebody will come to me with a deal and they'll give me all the details. And to me, it sounds like a bankable deal. It sounds like something that could go maybe to a Schedule A bank. And I'll say, why are you coming to me? As we get further down, when I talk about the details of Glass Lake, you'll understand why. We're not for everybody, and we've hit a certain niche in the market. So I always like to know, why are you coming to me? Sometimes it's obvious, but sometimes it's not. But you should be able to ask that question and answer it if I'm asking you. And then there's the how, and that's basically how much. How much are they looking for? What's the mortgage amount that they're looking for? What's the loan to value that they're looking for? How much of a cost are they willing to incur? And that is rates and fees. So the how is basically how much. And when you're trying to understand the story, these questions that you ask, it might seem basic, but a lot of times we're not sort of systematic in our approach. We'll just maybe ask one or two of the questions when we need to ask all six and beyond. And each one of these, the 5WH, you can go really, really deep and dig a lot deeper. But when you're doing an initial assessment, you just want to try to get a sense of the deal. And that leads me to this. So when you're trying to understand the story, I always like to step back. Once I've asked those questions and I have that information, in my mind, I like to try to formulate, is this a good deal, or what does the deal look like? I was a broker, and whenever I would call a lender, I'd like to have that vision in my head. So when I'm relaying the story to the lender to sort of get some interest, I could do that over the phone. And I'm trying to fill in as many gaps as possible. I didn't want to have too many gaps in my information, always anticipating what the lender is going to ask. You want to know as much as possible when you're initially vetting the deal, as opposed to just having lesser information and just submitting it and then realizing later, you know what, I should have asked a few more questions because this deal, we just can't do it, or I shouldn't have sent it to this lender. So once you've asked the questions and you've got all that information, step back, and these are basically the three key points to any commercial mortgage transaction, whether it's a $500,000 mixed use, or whether it's a $20 million project. It comes down to three things. It comes down to the real estate. Now, when it comes down to the real estate, you want to know, like, where is it? What type is it? What lender will do it? What's the condition? What's the marketability? That sort of thing. Again, you can go really, really deep and get into it. Then there's the cash flow. Where's the money? At the end of the day, we're going to have money to pay us back. And what's going to be the source of that cash flow? Is it going to be business income? Is it going to be personal income, investment income, rental income? Like, what are we going to use to pay our mortgage back? Now, typically with commercial properties, it's always rental income. But in the space that we play in, our income can be comprised of a lot of different sources, which kind of sets us apart, makes us a bit unique, because not all lenders look at it that way. If you go to a bank and you've got a commercial property, they're going to live and die by the rental income. They're not going to look at your business income. They're not going to look at any other outside income. Does that property support the mortgage that you're requesting based solely on the rental income? At Glass Lake, we expanded it. And again, that's what makes us special. And then there's the covenant. The covenant's basically the borrower. Who is it? As I alluded to earlier, is it a numbered company? Is it an individual? And then you've got to drill down to the individual. You've got to know, what's their history, what's their background as an investor, as a business person, and you try to make sense of it. So in your mind, with each one of these points, I always like to formulate an opinion. The questions give you the information, it gives you the data. This gives you the opportunity to analyze that data and make an assessment. Is the real estate good? Is it fair, or is it poor? Same with cash flow. Is it good, fair, or poor, etc. So this allows you to put it in your mind how you see the deal as either being weak or strong. And for example, you might have strong real estate, you might have a strong covenant based on the information that you've got, but you know your cash flow is going to be a bit of a challenge for whatever reason. So you know going into a discussion with a lender like Glass Lake, you're going to say, look, you know, the property is well located. It's marketable, it's adaptable. The borrower's strong, they've got good credit, good experience. But right now they've got some vacancy issues, and the property's not fully leased, so the cash flow is a bit weak. So, not saying we can't do the deal, but at least you understand, and you're going to be telling us, which leads me to the next phase. So again, making the call. Once you've trying to understand the story, ask the questions, formulate it in your mind, the nature of the deal, you see it, then you'll be able to determine, should I go to a bank or credit union? Should I go to a regulated alternative bank, like let's say an Equitable Bank or Home Trust? Or should I come to Glass Lake or a private or a MIC? Like, where does it fit? And by asking the right questions, seeing the deal, you'll know, and that'll save you time as a broker. The benefit of doing that is it'll save you time. You'll know where to zero in, what lender to send it to. And also, you won't be sending it to, like, 20 different lenders. And that's not a good thing, as you know. It's better to focus in on one or two, or hopefully one, which is Glass Lake, and know that that's my lender for this deal, and I'm going to make the call to them. So making the call to the right lender is very important. So now we're telling the story. So you've got all that information. You've asked all the questions. You might have all your notes. You might have stuff in your head that you formulated by seeing the deal. So now you're going to either call me or you're going to email me, and you can say, Romano, I've got a deal I'd like you to look at. And it's important to tell me the story about the deal. And I always believe in doing like a standardized approach. Everything I try to do, I try to approach it so I can replicate it for the next time. Every commercial deal is unique. I've never seen two deals that are alike. They're always different. But I always try to tell the story in the same fashion, hitting the same points. So much so that I came up with a checklist. And I'll talk more about the checklist later on. So the specifics of the checklist, rather. So the checklist would start with the loan summary. So the purpose of the loan, is it a purchase or refinance? For the purchase, what's the source of the down payment? Let us know what that would be. For the refinance, the purpose of the funds, whether it's a debt consolidation, equity takeout, or purchase of another property. The loan amount and the requested loan to value. And is the occupancy going to be either owner occupied, business for self, or investment, which is tenanted? And then just a little, brief summary of the property type. It's a mixed-use storefront with 2 residential apartments on College Street in Toronto. And just leave it at that. And then you're going to describe the income qualifications that we're going to use. So when you're looking at the triangle, we're looking at cash flow. Well, what's the source of income? Tell us. It's going to be rental income or personal income or business income or a combination. Like I said, with us, we can do a combination. Or, again, with us, we could do stated income in some cases. And then we want to know about the borrower. So the big thing with Glass Lake is the credit score. So credit's important. We need to know if this client is credit worthy. We're going to be lending money, and we want to make sure that they're good for it. They're going to pay us back. With commercial financing in general, net worth is more important than income. With Glass Lake, both are important. And the reason income is important on the personal side is not that we're going to rely on it in every case, but I always like to know that there's income available outside of the real estate in case we need it. So I always like to ask, what do they do for a living? How else do they make their money other than this piece of real estate, in case we need to tap in it? So that further sets, potential conversation I'll have with you, or you'll have with the underwriter when the deal comes in. And a big thing with us, and generally, when it comes to commercial financing, is the biography and the experience of the borrower in both business, if they're business people, or in real estate specifically. Have they had investment properties in the past? Have they dealt with tenants? Have they managed a property? Not to say that we won't lend to somebody that's never done it, but it'd be a lot more challenging. There'd have to be other factors that would really have to strengthen that gap or that weakness, because we don't know if they're going to be capable. They might take over a property, or they might buy a property, And once the tenants leave, or once they have turnover, they might not be able to handle it. They might not be able to handle maintaining it. They might think, well, I don't have to go and check on it, other than once every 3 months. Well, that's not the case. You got to be more on top of your real estate, especially since we gave you money based on that, right? So we want to make sure that our security is well maintained. And then let us know what available documentation that you have. Whether that's a rent roll, which a rent roll on a commercial property, if you're not familiar, it's a listing of all the tenants, how much they pay, and in some cases, they might even go further. They might say the square footage of the space, the expiry of the lease, that sort of thing. We don't need all that details, but what I like to do here is I'd like to sort of provide you with the information and the knowledge that if it's not a Glass Lake deal where we need lesser documentation and you got to go to a bank where they need more documentation, this kind of gives you an idea of the documentation that you might need. Income, expenses, financials for the property. That basically is the income reported for the property and the expenses that are attributable to the property, that are usually in a pro forma, or it could even be in financials that were prepared for the property. The property is held in a holdco, in a holding company, numbered company, corporation. Every year the accountant's going to prepare financials for it. And that's a great source for us because we can see what the income was, what the expenses were, and it gives us an idea of what the property is netting. And then the leases. The leases is, for similar to residential, but they're more involved on the commercial side. And they're basically an agreement on what has to be paid. Now, for available documentation on income, there's also, MLS listing, purchase and sale agreement, appraisals, that sort of thing for whatever you have. But I just want to talk about income for a bit. When it comes to commercial, think of it this way. Similar to a residential deal, more on the qualified side, where you have to go to a bank or somebody not like Glass Lake, because again, we're flexible. You usually have to provide notice of assessment, T1 general, pay stub, and let's say an employment letter, right? That's very similar to the commercial side, these three pieces of information. The notice of assessment and the T1 general are the income that was reported in the past. Pay stub is what the clients are making right now. So they might have made, let's say, $100,000 last year, but the pay stub shows that they're making 110 right now. They got a raise in salary. And an employment letter. An employment letter can provide what the client's going to be making going forward on a sort of guaranteed basis. Sally works for us in accounting. She's going to be making $110,000 going forward. So that's past, present, and future. Well, with commercial, it's the same thing. The income and expenses and the financials for the property are like the T1 general. It's what happened last year. The rent roll is what's happening now. It's like the pay stub. And the leases are like the employment letter. It's what's happening going forward. So it's good to have those if you can get them. If you don't worry about it. We do need a rent roll generally. We will need that information to know what the rent is being paid right now. We'd like to have insight into what happened in the past. We get a lot of our information from the appraisal. We do rely on it, and so do a lot of lenders. So documentation can be a loaded word. And one thing I always caution brokers is, just because you might have a menu of things you have to get, it could be a list of 10 things we need. We might only need 1 or 2 up front. The other stuff we can get to later. So don't think I have to get all this stuff before I submit the deal to Glass Lake, and because that's just going to delay time. Just give us what we need. And if you have a conversation with me over the phone, I'll kind of indicate what we need to get the ball rolling. Okay, so that's the part about the checklist and telling the story. So there'd be like a standardized format or standardized way of gathering all that information, like I said, and putting it together in a concise, whether it's a loan note or whether it's on Filogix, whether it's in an email or whether it's formulated in your head. You have a checklist, and we're going to go down all the items on the checklist while we're talking, and then I can tell you, we can probably do this deal, and that would be great for the underwriter. Provide all that information when you submit it. Now, as an aside, we do have a checklist that we can provide to you, and if you sort of reach out to us, we will provide a copy of a formal checklist that's a bit more specific, a bit more standardized. I just talked through it, but I can tell you what to look for. So, talked about understanding the story, telling the story, how to see the deal, how to put it together. Now, that's whether you're coming to me or whether again, making the call, whether you're going to one of those other types of lenders. Glass Lake, I want to tell you a bit about us, what we do. Now, we are your small commercial pros. Glass Lake, our cornerstone is small balance commercial. We do residential as well. It's a very big part of our business. I think it's almost 50-50. I'm not sure of the breakdown. But commercial is very, very important to us because of the space we occupy. Not too many people do. So, we're sort of unique in that area. Just to, the slide, there's a lot of information, but just to highlight a couple of things. When it comes to DSCR is debt service coverage ratio. That is a criteria that we use to qualify our commercial mortgages. And that's how we get to sort of whether or not the mortgage can be carried by the income. And then there's bank statement. Bank statements is a way that we determine our income depending on whether it's an investment or an investment property or owner-occupied property. Credit is very important to us. So we need a minimum credit score of 650. We have found that, when you maintain a credit score of 650 and up, it works. Like the deals tend to be a lot stronger, despite maybe having some other challenges. Remember the triangle? As long as the covenant, the credit is at 650, we might be able to manage some of the weakness in the other 2 points. In terms of loan to value, we'll go up to 75%. A lot of small balance commercial don't go that high, but we will. In terms of loan amounts, we'll look at anything from 200,000 to 2.5 million. Now that's pretty much our policy, but we will go up to 5 million. We're in the process of changing that officially, but we will look at deals up to $5 million. Our terms are 2, 3, 5, and 7, and we do a principal and interest type term loan. So the client will not pay interest only. That is an attractive feature to some borrowers that are into the commercial space. They've got a commercial property. It could be an automotive shop, which we do. If we're going to go through some of the property types in a sec. And they might not be able to get financing at a traditional lender, and they've got to rely on going private and paying interest only every year, renewing it, paying new fees, and hopefully being able to pay down a chunk every time they renew. With us, they can lock into like a 5-year term, P&I, 30-year amortization, and slowly chip away at their principal like a traditional mortgage, like a residential mortgage. Qualifications, appraisal and market rent. We rely heavily on our appraisals, especially given that we'll go all over Ontario, especially given that we'll look at small markets and we might not have boots on the ground in that area. I can't drive to Thunder Bay easily to go look at a property. So we rely on the appraiser's opinion and on the information on that report. If it's a GTA property, you can always say, yeah, on the way home, I'll drive by it or I'll go look at it on the weekend. But that's why we rely on the appraisal a lot, because of the fact that we do a lot of outside of major markets outside of GTA. Now our debt service coverage, I won't get into that today, but we will go as low as 1, which is, I would say, pretty unheard of, but it is. The lowest I've heard in the market is 1.1. And that's basically giving you 1.1. The 0.1 is a 10% cushion in rent over expenses, of rent over what it's going to cost to pay the mortgage, right? Typically it's 20 or 30. It's either 1.2, 1.25, 1.3. The 0.2, 0.25, 0.23 is 20, 25, or 30% cushion over and above. We'll go even money. And the reason we make that decision is the minimum credit does not apply there. We need a higher credit score. The stronger the credit, the stronger the borrower. We sort of mitigate that risk by having a stronger borrower, which allows us to sort of bring our debt service down. What that does is that allows us to hit the 75% and get close to as close as possible. And in terms of bank statement, we need 12 months of consecutive bank statements. And what we do is we draw the deposit income from those bank statements. We get the client to provide a profit and loss, a P&L statement, which basically outlines their expenses. We don't need accountant prepared financials. And if it's reasonable, the underwriter is going to look at it, they're experienced, they're going to say these expenses for this type of industry, given the income on the deposits, it's reasonable. And then we'll use that income to make our decision. And if you note at the bottom, we pay our brokers 100 basis points on the 2, 3, and 5 years, as well as the 7. Our standard lending fee is 1.5%. So anybody that we lend to, the client's going to pay us 1.5% for that mortgage, and we turn around and we give 1% to the broker. You can always add your own fee over and above that. You're responsible to collect it yourself. We will not collect it on your behalf. But if you wanted to make 2% on a deal, you get 1% from us through the client, and then you could charge 1% on your own. Now, in terms of property types, see, one of the things about Glass Lake, despite, there's a couple of things that really stand out, but one of the things is the property types. You've got your more traditional, multifamily, which multifamily is 5 or more residential units, small apartment or 20-unit apartment, minimum's 5. Mixed use, which is storefront and residential. Converted single-family residence must be zoned for commercial use. That's a bit of a funky sort of property that not everybody does. But what I was getting at is like multifamily, mixed use, office, commercial condos, light industrial, retail. Those are all basic property types that a lot of people do. What kind of sets us apart, in addition to being, going to small markets, lower loan amounts, we'll do the converted single-family residence as long as it's zoned for commercial. We'll do some automotive on a case-by-case. We will not do gas stations, but we will do like automotive repair shops. We will do some warehouse and self-storage. We will do bars, restaurants, daycares. A lot of more traditional lenders will shy away from that. And sometimes they are driven to private just because of that. They can't get financing at their traditional lender because of the use on the property. So I'm going to skip over this for now. I'm going to come back to that. But I want you to think Glass Lake before going private. And this starburst sort of illustrates, the high points. So when you're looking, we've got business for self and we've got the seasoned investor. Those are our 2 types of clients. Those are the clients we like. People that are self-employed, they're going to own or occupy the space, or the investor, they're going to lease it out to a tenant. We've got low to high loan amounts. We'll go as low as 200,000, as high as 5 million, as indicated there. Our qualifying, we try to make it as simple as possible. We don't throw the rule book out the window. We just try to look at it in a more, realistic manner, right? We're not so much tied to certain things. We look at, does the deal make sense? Does the income make sense? Does the real estate make sense? When it comes to our renewal fees are $500. So if a client were to come to us for a 2-year term on a commercial mortgage, at the end of that 2 years, all they have to pay is $500. Again, our ease of underwriting, we try to minimize documentation as much as possible. We always do that with our initial approach. If we need more information to try to make the deal work, then we will come back to the broker and say, look, you know what? We like the file. We can't get to what you're looking for. We need some more income. We need some more information. Can you provide us with this? So we always start with an easier, quicker way. Speed is very important to us. But if we need to expand and dig a little bit deeper, we will. I always say speed is like the second most important thing. Getting the deal done is the most important thing. We'll try to be fast if we can, but if we have to slow down a bit to try to make it work by asking some more questions, then definitely that's what we'll do. Lower rates and fees. If you look at the space that we're in, I always like to look at it in terms of cost. What's the cost to the client? The cost is comprised of the rate, the fees, what reports you're going to need, any third-party costs that you're going to have. For example, I know one lender, a MIC actually, they need an appraisal, a building condition report, and an environmental. It doesn't matter. They need all that. We'll need an environmental if it makes sense. If we think that there might be an issue environmentally, we'll ask for one. If we need a building condition report, which is kind of like on a residential side. It's it's the property inspection. It's more detailed. We'll only ask for that if the property doesn't look 100% sound. If it's got some issues that are obvious, or if in the appraisal, the appraiser indicated that there's some potential for some deficiencies, then we'll ask for it. So that adds an extra cost to the deal, right? So we try to minimize that as much as possible, but if it's needed, we'll ask for it. DSCR as low as 1, secondary markets, which I've talked about a lot. And one of the things that sets us apart is Glass Lake has ample liquidity. We are very, very well funded. So unlike some smaller credit unions or some mix or some privates, you will never hear me say, I can't do this deal this month because I'm waiting for somebody to pay out or pay down a mortgage. We're always ready to go. So bring us deals. Liquidity is not an issue for us. So it gives us, like, we're lending from a position of strength versus a position of, like, we have to wait and see what happens. We've got money to go, and again, that's one of our superpowers. So in addition to providing mortgages, which is our bread and butter, we're doing things like here at Glass Lake on the commercial side, things like this webinar. We're going to be providing information, education, training, whatever you want to call it, but we want to partner with our broker partners and go a little bit beyond. In the end, what we want to do is help you grow your business, whether it's getting financing from us, being able, you being able to get the mortgage for your clients through us, you're growing your business. We want to work with you closely. If you reach out, if we can connect on tips, tricks, strategies, things that we can add and enhance the relationship to ultimately grow your business. Whether or not the business all comes to us. Let's face it, not every deal is going to be a Glass Lake deal. We always say we're not everything to everybody, but if I can provide some assistance, provide some guidance on you getting a deal with, you remember them making the call, whether it's an A bank or one of the alt lenders that it might make more sense for the client to go to. If I can provide assistance with that, with helping you get that, then I'm here. So some tips: check your existing client base for business for self clients and investor clients, people that you might have done a residential deal in the past that fall under that category. Go back and see, in their application, did they have a commercial property? Are they self-employed? Do they rent or do they own? Is there an opportunity to have that discussion? Have you considered maybe buying your own property? Yes, no, why? Well, BDC told me that I need 45% down or 40% down. Well, with us, you can go as low as 25. So if you're waiting to accumulate your down payment, you might already have it. It's just you need the right lender. Look beyond major urban areas. So as a broker, if you're prospecting for opportunities, look outside the traditional, larger markets. With the way the valuations have gone now, a lot of investment properties in the major urban areas, the math doesn't math. It doesn't make sense. And it's better to get clients that are looking at smaller markets where the return could be higher. You know what I mean? They could buy a 12-unit apartment in, just outside of Owen Sound or in Owen Sound for a lot cheaper than it would be in Toronto. The rent might be a little bit less, but if you look at the rents are pretty strong. The math might make more sense and the return might be higher. Well, we can finance that property, right? We can look at financing that property. Take advantage of the resources, education, and relationships. I alluded to that earlier. We want to help you grow your business. Take advantage of us. Connect with commercial real estate agents. Now, this is something that I really want to put out there. And if you want to partner up with me, and you've got a realtor, you've got an office you want to go speak to, or you're dealing with now that you've traditionally done residential, and now you want to explore doing some commercial, I'll come out with you as your partner. I will not bring my business card. They won't know I'm with Glass Lake. I might mention it, but I'm not going to give them my contact info. And we'll go together. I'll do a presentation with you. I can tell them, what we do and how we can help. And if they have any questions, I'll say, speak to my broker partner. If you want to know more, connect with them, and they'll contact me when needed. And work with a lender that knows how to get deals done, and that's Glass Lake. We love to do deals. I love to do commercial deals, and we know how to get them done. So I want to get back to this slide. So again, if you want that checklist, then reach out to us, and you can email me. I don't believe there's a link at the end of this webinar, but there might be a link for you to reach out, and I'll send you a copy of the checklist. But just to give you an idea, so these are the deal details of a property that we did. It was located in Windsor. A lot of lenders, for whatever reason, they still have prejudice against Windsor. Windsor's a great place, great properties, great opportunity. So it's an area we would do, light industrial commercial property we would do, loan type commercial. Loan amount was $887,000. A lot of lenders won't get out of bed for less than $1 million. So, $2 million. We would do this all day long. Loan to value is very strong at 60%, maximum 75, 60 is considered strong. The term was 3 years and the amortization was 30. Now the qualifying method was global DSCR using bank statements. That's basically tells me is it was not a deal that we relied just on the property. We needed more income to make the deal work. So we went outside the traditional of what's the rent? We said, what's the rent? What other money is there available, right? And that's how we were able to put that deal together. So this was a refinance, and let's see, I'm just looking at the challenges that we had with that one. Yeah, we had no challenge with the boundaries, and we were able to increase the payment stability through longer term. And note, this thing was approved within 24 hours. But if you're looking at the checklist for this property, you'd start off that it's a refinance. Now it doesn't say whether it's owner occupied or if it's business for self or it was an investment property. I apologize. I believe this one would have been owner occupied by the fact that we use bank statements. So you'd say, look, I'm looking at a refinance of an owner occupied property in Windsor, Ontario. It's a commercial property. We're looking for $887,000, 60% loan to value. And then you can tell me a bit about the borrower. I don't have all those details there. So go into a little bit of details about the borrower, how long he's owned the property, what the business is, and so on. Bank statements are available for income. Tell me the credit score. And that would be it. So you structure your loan note that way. You hit all those points in that brief, I don't have all the information, but, about the borrower, but basically that's how you would send it to me, or we would talk about it over the phone. Now, I apologize if this seems basic for some of you. They say, well, I do that all the time. Sometimes with commercial, people, they get, I wouldn't say intimidated, but they think it's a lot bigger than it is. It's not. And especially at Glass Lake. Making the call, those other lenders, yeah, it's a bit more involved. But with us, it's almost like doing a residential deal. Just some of the things, there's a bit of a difference on the nuances. For example, that income thing. Remember when I mentioned the NOAs, the T1s, the pay stub compared to, the rent roll and so on. It's the same thing. We need income. We need confirmation. We need income. We need confirmation. It's basic. You don't need to know all the details, but you just need to know that that's what we need. And, we can help you fill in the gaps. We take our deals through Filogix. We take our deals through Velocity. I can look at the PDFs, but then I'll turn around and say, just submit it. And it's like a residential file. So we try to demystify the whole thing about commercial. Our turnaround is for these properties is a lot quicker than the bigger deals. The bigger deals can take years to close, and you're waiting to get paid on that. These, if you focus in on small balance commercial, they close just as quick as residential properties, and you could be churning them out, and you can charge quite a bit over and above what you can get from the 1.5. So contact me. Here's my contact information, and if you want a copy of the checklist, I will gladly send it to you. If you have a deal to discuss, you have anything to run by me, even if you know that it's not a Glass Lake deal. Don't feel bad about calling me for a deal that you want to send to, one of the other lenders where it might make more sense. I'll speak to you about it. I'll give you some guidance on it and maybe how to structure it and so on. And I thank you for your time. Any questions, please reach out. Thanks.